In this video, guys, we're going to look at 5 reasons to trade stocks after hours. Stay tuned. Hey traders, a very warm welcome to you. All right, so regular trading hours are when, if we're talking about US stock exchange, are when the bell goes, NYSE bell opens, NASDAQ starts trading, NYSE starts trading, off we go, and that's 9:30 East Coast time, 2:30 p.m. UK time, all the way through to 9 p.m. UK time, 4 p.m. East Coast time. That's the window you have to trade US stocks. Once the closing bell goes, that's it. If you're trading CFDs, that's it. You can't open any more positions. You're done. You have to wait till they open the next day or the next working day for over the weekend to trade a position. Now, you no longer have to close your positions at 9 o'clock if you don't want overnight risk. You have an extended period of time to not only close positions that you've perhaps traded in the day, but also to open new positions. Now, why would you want to open new positions? The first thing, guys, the big thing for me is earnings volatility. If you are a intraday trader or if you're a volatility trader, you like trading this kind of price action, then trading during earnings is the kind of extreme version of volatility. Earnings, if you haven't seen them, guys, you think of like Tesla, of Amazon, of Apple, Netflix, Facebook, these big US companies, when they have earnings, they can significantly move the price. And normally we can't take advantage of it. We have to the market closes at 9 o'clock UK time, then the earnings will come out, then they have a kind of conference call normally, or an earnings call, should I say, and then the price opens next day, it gaps up or gaps down or does nothing. And actually now, because you can trade a selection of these US stocks after hours, there's a price offered to you during earnings. So let's say, the market comes out and earnings, huge earnings beat, price is suddenly ripping up and you think, wow, this is a great opportunity to jump aboard this momentum. Now you can. Via the link in the description below if you want to check them out. You can join it, you can join the momentum, or vice versa. You can go right, or take the counter approach and go, hey, you know what? This is kind of a bit extreme. I feel like a bit of price exhaustion here. Let me get an early short here for an unwinding, thinking that actually next day, I think we might gap down and have a 2 or 3 day follow through. When you could do that. So you can trade earnings. So you've got a couple of ways of angles here. One, you could just trade the volatility. If you want to trade in and out during the volatility, the extreme moves that you get during that little window of kind of trade while the earnings are coming out, there's that. And there's also the opportunity to be able to capitalize on maybe taking profits on a trade. Let's say you've had a long swing trade, coming into earnings, get a price spike in earnings, taking your trade off the table, or initiating a fresh trade kind of before the market opens the next day. So that's a really big advantage, being able to trade actually through the earnings rather than having to wait the next day and say, oh, so-and-so's gapped up to 15% already. And then you're kind of looking and trying to find a strategy based on, how it's gapped. So you can take advantage of that. So that's a really good reason or advantage potentially. Now, obviously, guys, with volatility comes risk. But if you like volatility, if you like taking a little bit more risk and you're into that kind of stuff, this does really open up a new way to trade. Okay, the second thing is get a fill on limit order. So, let's say you can really take advantage of price, extensions and stuff, because, guys, during after hours, liquidity is less, and so it takes less volume to move price. And often you get these kind of pings in price, runs, and if you've got a limit order in, and obviously the Pepperstone price goes through that limit, you're going to get filled on that. And so what you can do is, if you're kind of looking for extra stretch, you might just kind of see, hey, the market's run on 3-day run, it's closed at highs, let me hold it. You get an after hours push as the final kind of few buyers come in. That might give you a little bit of extra extension and you just get filled on a limit. Now, you wouldn't get that normally. You have to wait till the next day until you get filled, and then you have to go directly to the exchange normally to kind of get filled after hours. But now if you're trading via CFD, you can get filled after hours. That's a nice benefit as well. Allows you to take advantage of those little extra stretches in the spring. And the third thing is manage risk more effectively. So, basically just flipping on its head, stop orders. If you have a stop in, and let's say some sort of news hits the market overnight, or hits the market between the windows that you can trade it, let's say just after 9, the bell's gone, bang, some news comes out, and you're going to get stopped, then you can get stopped. you can mitigate that risk far more effectively than having to wait till the next day, or potentially more effectively, rather than having to wait till the next day where you've got that gap. And of course, we know if price gaps through your stop, you're just going to get filled at the first price. So you end up being able to cap the risk potentially better by having a price quoted to you after hours. All right, number 4, guys, is a position after earnings quicker. So trading earnings volatility is one thing. I kind of touched on the fact that perhaps you can position quicker. So let's say you've been waiting for a stock to have good earnings. When the earnings come out, you normally have to wait till the next day position. Now you could position after hours and maybe get head start on the gap up. So if you have kind of got a trade strategy to benefit from that earnings volatility, or benefit from the earnings reprice, if you like, in the asset, because of course it's such a binary event. You've got a valuation of asset is X, and then a document comes out and says this is how well we're doing, this is how much money we're making. The valuation may well then come to Y, and Y could be significantly more, significantly less. And if you can jump on that before its true valuation and price discovery is made in the next day, you might get a bit of a head start. So you can jump a position after earnings releases much quicker. And the final thing, guys, is you can hold on to winners through and after the close. This is a kind of nice benefit you tend to forget, especially for a day trader or even a swing trader as well. In your day trading, we've all been there for day traders. We've got maybe an alarm set for the close, especially if you're trading US stocks, because if you are in a position, you're kind of looking for a squeeze to the close or a reversal back to the close, or some kind of trade, specifically a kind of squeeze, a final squeeze push up or down, a kind of extension of the trend type trade. And if you're a day trader, you know that's kind of a nice bread and butter setup, that final little flurry into the close. If you have to close your position before the market, before the bell goes, you're there, you kind of, when the bell's going, and you're waiting, maybe do it a minute before, 2 minutes before, whatever it may be. Now you don't have to worry. If it's one of the CFDs, share CFDs price on, don't worry about it. You can then just stay with the trade and go, let's just see. I might just drag a stop up, I might just monitor this, see how it behaves at the close. Maybe we get a follow through for a little bit more. Maybe you can squeeze a bit more juice out of the trade. Maybe you see even closes at highs and goes, you know what, I'll hold it for the next day. I'll hold it after the extended hour session closes until the next day. You've got a little bit more flexibility. So you'd always have to just close the trade right on the bell because you're worried about being stuck in a position you don't want. A little bit more flexibility, a little bit more time. And obviously if you're working and you're trading, you like trading, it gives you more time to trade as well. So you can trade the US stocks that you like to trade, the volatile stocks that you like to trade. You don't have to stop at 9 o'clock anymore if they're available to you in the after hours session. Offering those shares in the after hours session, you can trade throughout the evening as well and kind of wait for your opportunity, wait for your setups, wait for your strategies to trigger. All right, guys, so there's 5 reasons to trade stocks after hours. Not for everybody, but having access to a selection of US shares via CFD after hours really opens up more opportunities, so you can take advantage of that if that's the type of trader you are, if you like to really get stuck in to some of the more volatile instruments, which at the moment, to be honest, guys, are definitely the US stocks. Go and check them out. You see Trader MT4. Actually, I think if you're using the share CFDs, you've got to be MT5, but go and check it out for yourself. There's a link in the description below. Go and see what it's all about, see if they're right for you, and take care. Whatever you're doing, if you're trading the high volatility stuff, take extra care to manage that risk. Super high rewards, but super high risk as well. See you next one. Bye-bye.